Hey everyone, today is actually right now is almost Thursday. It's Thursday 1 a.m. in the morning, but this is like a Wednesday video, right? So let's take a look at the market today. Right now is November 12th, but this is November 11th. End of the market video. Let's take a look at the market today. Basically, I've been talking about, this rally cannot be trusted for the last maybe 2 weeks. And go watch my last video. I talk about a potential scenario similar to 2004, where we could have a kind of a deck cat bounce kind of going on, and eventually we probably have to retest this level in Nasdaq, which is the previous high, all-time high that was made before it was hit by COVID. And I think we could have this kind of a shakeout coming in, where a lot of people can see, if you look at this market structure here, there is a trend line that everybody can see here, right? Like this particular trend line. And this trend line, everybody can see it. So it's meant to be broken sometimes. So I expect, it's going to be broken. It's going to be a shakeout. And then the market's going to take off to the upside again. I think right now we are in the middle of that. And during this shakeout, it's very likely that we are probably going to encounter some of the high flying stocks like Zoom and all that stuff is going to be hit the most, and that is what I'm looking for. And one thing so that's what the market in right now. That's my view, right? I expect that we are in the middle of this kind of shakeout, and eventually we're going to head down much lower, but then we bounce. Let's see. Some of the high flying ones, it looks particularly kind of interesting. Is one thing is NIO. The NIO is coming. We have earning coming up right now in a couple of days next week on November 17th, and it seems that NIO is making. It has been going up pretty crazy, like every day just up, right? And eventually we just a couple of days ago is showing a little bit of weakness, but today it has been brought up again like that. And the reason that is kind of interesting is because I was trading this today actually, and I think we are due for a correction. NIO it is coming down and came down and is touching this trend line here. So if tomorrow this thing kind of roll over, we might have a pretty large correction going on. That's gonna happen. The one thing I've been looking at is the something. You could have something similar to 3D systems that we could have this kind of pointy top going on. I don't know if this is going to be a top. It's really hard to say, but when I'm just looking at the market sentiment right now, this stock is just have a cult following. And I mean, I got in. I actually bought right there last year, and unfortunately I sold here. I never bought it back. That was stupid of me. But right now we're at 43, and there are people still buying. Okay, and I think this is a kind of a highly risky location to buy this particular stock. It's just ridiculously risky if you're going long. The amount of risk is insane. First of all, we're looking at the turnover rate of the stock, right? The number of shares, the volume that's being traded every day is almost equivalent to 20% of the entire shares outstanding, which means if I'm the founder of NIO and I own 20% of the company, I can actually trade out my position. I can sell everything and just in a couple of days in this market, I can dump everything to the retail investor or to whoever's buying these days, because the stock is just so crazily liquid. And think about if you're a founder, like a founder of NIO, right? Think about this company, like if you own this company, and all of a sudden, this company is now worth 40 times from last year. 30 times from last year. You're probably just gonna sell here and buy it back later, right? Buy back your business later and still be the CEO. You don't need to own the company to be the CEO. You can still be hired as a CEO, and you sell or dump your shares right now, and then this thing's probably gonna collapse because you're dumping it. Then you buy back later, and now you probably made it's much easier to make money this way, right, than actually making cars and try to make money from your customers. So at this current level, this thing is so elevated, the risk is just tremendous, and I don't know if this could continue. And the weakness that's happened, that was showing on November 10th, could be a precursor for something that's much bigger. Especially we have an earning that's coming up, and I think this stock is just highly risky to hold if you're buying here. Another thing, investor space, NIO. I was looking at this article from Investor Space where this article. This is very interesting. Safely trading NIO stock ahead of high expectation earnings. Basically, I'm just gonna skip through this and I'll show you the summary of it. The trade right here. Sell December 35 puts for 215. And that is the trade they're recommending. Just sell naked puts, December 35. You pocket 215 per contract. If NIO does fall below 35, then you have to buy 100 shares at a cost base of 32.85. That represents approximately 25 discount from Monday's closing price. It looks to me that they're recommending this trade. They're saying that this particular trade is absolutely foolproof and you can't go wrong with it, because these options gonna expire worthless probably 80% of the time. And what could go wrong with this trade? When I think about this, right? What could go wrong with this trade? You sell the December 35 puts for 215, and this trade could go wrong if the price falls dramatically below 35. Okay, so let's take a look at NIO's chart right now. Right here is 35. Okay, this is 35, and if the price falls to let's say this level, $28, so you have a 35 minus 29, or like a $29 minus 29, we have $6. Basically, if you sell this to 15, by the time the price does get to 28 after earnings, let's say it has a crash just like Zoom, right? And now this option is going to be worth a intrinsic value of 215. I'm just roughly speaking, plus a 35 minus 28. And that is a $7. So 7 plus 215. This option is now worth $9.15, right? So basically, your account, if you're selling this $9.15, So now the option is worth 915 at that point. 915 divided by 215, you have a 4 times kind of loss here. And that means, so let's say you sold 20,000 worth of this. You got 20,000 from selling this option. Your portfolio, you better have 100,000 to cover your ass at that point, because you need a 4 times the amount of margin requirement right there. So you could be getting a margin call just all of a sudden by selling this naked puts. So that is very high. That is a risk here. You could be getting a margin call if all of a sudden the stock falls like Zoom, like this. At this point, you're gonna be getting a margin call. If 20%, if you have a $100,000 portfolio, but you sold a $20,000 option, and now you're gonna have problem. So this scenario, if this does happen like that, which it has happened to Zoom, has happened to Peloton, it has happened to several other stocks like Beyond Meat, right? And these are not good. These are not good. Okay. Anyway, and that's what I want to talk about. Okay, let's take a look at the cryptocurrency, Ethereum. Ethereum don't really see anything in particular that we're trying to break this all-time high. I still believe that we won't be able to, because we're just consolidating here for too long. If we are doing that for too long, it looks to me that is a bull trap, that we are just trapping a lot of buyers here, and eventually we're probably gonna going higher. We're closer to this high, and I don't think the price is gonna go through it. We'll see, right? Not ready to go short yet. I want to see the price action. I don't want to go short here, and then the price just keep climbing up, and I'll be forced to cover my shorts. So I'm just gonna stand on the sideline and watch to see how this thing's gonna move. Okay, and yeah, and that's all I want to talk about, and see you next time.